Hello, traders. So this target bonus earnings trade should be closing here probably within the next hour or so, I would guess. And it should be a little over $1,000 in profit. But it was an odd one. It was really, really challenged out of the gate. So I want to, as part of the educational process, I want to walk through the steps that was taken on this trade because those of you that are taking the deep dive calendars and diagonals course, you'll have a lot of examples like this. And this is really something that could or should maybe add to that education. So I'm going to walk through this kind of a trade at a time here, an adjustment at a time here. So let me switch over to where I can start marching through those, and we'll kind of play this through together. All right, so let's go back to the proposed trade prior to earnings. So this was going to be a double calendar. At the time, target was trading right around the 108 range. So my thought process when I looked at a technical analysis of the chart that, I'm thinking that target under normal circumstances might drop down to 105 or it might shoot up to about 112. Of course, around earnings, this is always a huge crapshoot. You never know. Anyhow, my proposal was to get into this double calendar, which I got filled on at 50 cents for 5 of them. So my maximum risk in this trade was $250 if the thing went off the rails, assuming that I did no adjustments. And then I closed that trade on November 17th, which is actually the day that I'm recording this today. So this was the position, again, entered at 50 cents. Well, the next day, things totally went off the rails for this trade. The market target absolutely ripped up. So again, it was down here around the 108. It was up at 128. That's almost a 20% increase. That's massive. But you can see here that my max loss is right around that roughly $200 range. Which is, again, I was expecting 200, 250. If this went to expiration and I left it up here, it would have been at around 250. But the very first step I made in this case, these puts, these 105 short puts, became worthless. Now, I was short those, so that's good. I was able to close those out for a couple pennies, basically giving me the maximum potential profit in those short puts. There was nothing more to be gained by hanging on to those. So now I'm in this position here, and obviously this is not good, but if the market were to pull back, I'd be in decent shape. If it doesn't pull back, I am looking at hitting my roughly max loss there of 250. However, what I wanted to do here was basically to also come in and sell this 112 call. Now, this had a high value on it at that time because, of course, the market had ripped up, and this is my long call. So this long call, I was able to sell for a large amount of money, relatively speaking. So that was my next step, was to sell this long call. However, you can see for a short period of time, that was going to put me highly directional in this trade. So I needed to understand that for a short period of time, until I made my next move, I was going to be in a directional trade. So I got filled on that. I was in a directional trade. I'm down, my roughly $250, $300, somewhere in that range. My next move at that point was basically to I went and closed these out. This happened in 2 separate trades. This is the 105 puts. So those 105 puts, I could get nothing for them. I could get a couple pennies, but just for simplicity's sake, I wanted to go ahead and close those out. So I did that. That happened in 2 separate trades, which again, I'm still highly directional at that point. And now I'm proposing basically also closing out this long call here. This is my short call, which I'm going to roll. Now, this is going to be expensive. to roll this. And I'm going to roll it up, basically turning this trade into a large straddle. That is now my game plan here. So by rolling this up from 112 up to 130, I was basically saying at the time that I think that target has largely done its move. I don't think it's going to go much higher from here. A 20% move is a massive, massive move in a morning, and it started to plateau. It was kind of stalling around that 130. So I basically went and rolled this whole thing up, and then also rolled up. So I ended up with a call and a put here. So you can see that's basically my straddle position. But note, this is a naked straddle. So I do have essentially unlimited upside risk, unlimited downside risk. But my premise at this particular moment is that it's largely done its move. Earnings were just announced. It's made its move. I'm not really expecting a great deal more to happen at that point. And as the market did start to even continue up a little bit more, I ended up bringing the call much closer as well. And I rolled up into this position. So I basically just tightened my straddle a great deal. I made it a much tighter straddle. Of course, I was moving my downside risk much closer in that process. But again, my premise here was that I was okay doing that. This was on November 15th. This thing is going to expire in 2 days. So I'm thinking during the next 2 days, I'm going to get some real fast decay here. But again, I have to be prepared. I have to understand that I am taking some risk here. But if target were to stay between 125 to the downside and 132 to the upside over the next 2 days, I stood to have a decent gain in the trade. So after that was all executed, this was my position. This is currently my position. I did have on 5 of these. I did actually thin 2 of them out yesterday at a favorable price, and I'll end up thinning the balance of those out here. Again, I'm expecting very, very soon. So if I come back right now and take a look at the grid, again, we'll see that I should be right in that $900 to $1,000 profit range, and I do have an order out there to close this trade. And I would expect that that is going to close here very, very soon. My order is out there at $1, or excuse me, let's see here what that order's out there at, $2.25, and we're currently trading about $2.30. So again, I would expect this will close momentarily, and I just wanted to provide this video content to kind of walk through that entire process that I took on quite a few different adjustments here on a calendar earnings trade. I guess that's it. Just wanted to kind of wrap this whole thing up as a lesson for everyone. Take care.